And so the total duration of this trade was about 11 minutes and 46 seconds. The profit came out at 209, and like I was saying, so I'm really gonna focus on what I'm thinking right now. So I'm thinking to myself that yes, I do believe we're gonna trade higher. All my trades that I've showed you so far, and I'm gonna show you, have been long. So until the market on close macro, which I'll show you also, all my trades entering long, but I'm cognizant of the fact that the environments are not the best. And so, I guess if I were to look at myself in the mirror and talk to myself, I would ask myself, well, why would you even push the button? At the time, I'm thinking to myself, if I know where price is going to go, why wouldn't I enter the trade, and do the best that I can, right? Well, it doesn't work that way. And even though at this point, I know where price is going to go, the initial drawdown that I had met in the first, what is this? The fourth, fifth, sixth, and seventh trade, the initial drawdown had set me pretty far back already. And at that point, more importantly than just the dollar value of it, it's more of a mindset, or my mental capital has been drained. And so, these trades are feeling longer than they should. They're feeling more and more resistant than they actually are to reaching targets. And you can see that, yes, I'm looking at a 5-second chart. Why? Because I'm trying to get more feedback. Now, if you're trading a 15-second, it's essentially the same thing as a 5-second. If you're trading a 1 minute, it's basically the same thing as a 15-second. It's just broken up into more quadrants, or more fractals, basically. So everything kind of roots off of the 1 second, and so that can be translated to a 5-second can be translated into a 15. So that's my thought process, that it really doesn't matter what chart you're looking at, like the time frame. I'm just kind of looking at each and every high and low on this 5-second chart, and you can see that the premise that I was executing on was that we were below that opening range gap. We were hovering below that Friday opening range gap, which is from last week. And, we are bullish. We have traded in down below the daily first presentation fair value gap for July 2nd. We have traded into the June 30th opening range gap. We respected the upper quadrant. And now we're hovering below that Friday opening range gap. So we also have that 9:34 a.m. first presentation. So basically, I'm thinking to myself that it's going to bump up into there. And so, without wasting too much time, it eventually does. Look at that. Goes up into it and then pulls back down. So high resistance. That's a signature. Now, something I've debated doing in my trading for these types of situations where price is high resistance, but I know that my entries are at points where I guess I could set up for a new high of days. So, for example, this trade could have been it for the day. I could have held it till new highs of days, or a new high of day, and I could have been set. But I was trying to exit at the 5 handle mark, and also on short-term highs, and rather than entering as price is pulling down, trying to exit when price is trading higher. So So here, traded up into the new week opening gap high, pulling back down. I cut the trade. Why? Mindset. That's it. So what do I mean by that? Basically, at that point, I'm just thinking, okay, rather than enduring any more in this trade, I'm just gonna exit, take what I can, and see what price is gonna do next, and then I'll enter based off of that.